Hi, so welcome back to Dapp University. So today we have a lot to talk about in our live stream today. We're talking about why today is such a critical day for crypto. I know a lot of people are looking at the crypto market saying, hey, when is this dip going to end? When are we going to resume a trend higher? We want to talk about some events that happened yesterday and some events that are taking place today that could have a big impact on that, okay? We're going to look at that. We're going to look a lot about the news updates that have happened in this space since our live stream yesterday. Again, we do these live streams Monday through Friday on this channel. Just turn notifications, subscribe. You'll find out about those whenever we go live. We're going to answer some of your questions and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. Last but not least, like nothing I'm saying in this video is designed to be financial advice, and there's lots of scammers down in the comment section below. Just ignore them. Like, I'm never going to give you my phone number on YouTube, never going to ask you to invest with me, never going to invite you into like some secret Telegram chat room, never going to DM you on a social network, nothing like that, okay? So just, watch out for that. All right, so we got people jumping in the chat here. We got Culture Highs, Automatic Beats, AK, Danny, or I hope I'm saying that right. Devin Shoe, Scott, Made You Look, Daniel. Awesome. Lots of people were on the chat here today. So let's talk about why today is such a critical day for crypto, and what happened yesterday. What is sort of the state of things? Well, let's start off with the crypto markets in general, and kind of look at the current moment because prices are correcting still from the correction that we've been on for the past maybe 7 days or so, maybe even longer than that, maybe about 14 days now. And people are sitting around waiting for recovery, and we keep, seeing more bearishness play out. Some people are worried we're going to enter into a bear market. I shared my thoughts on that in the live streams. I know that's changed, but I'll talk about that more in a minute. But let's talk about something that I think can be a factor on this in the short term, a couple things. So today is an important day, and we're seeing this event basically affect lots of other things outside of just crypto, which is stocks fall ahead of a key Fed decision. So NASDAQ drops 1.1%. As software names slide, there's lots of editorial in the headline here. But the whole important thing is there's a Fed meeting today where some important decisions are going to be made, or at least the intent to make some of those decisions that are going to have impacts on inflation, interest rates, all those types of things, and give traders, investors a pretty, give traders an indication of what they plan to do in the future that can determine their decisions, whether they flip bullish, flip bearish, how they want to formulate their strategies based on what the Fed states that they are going to do. So I actually saw a tweet thread on this that I thought was pretty good that I want to pull up because I don't pretend to be a macroeconomics expert, but I do want to pull up this thread that I thought was a pretty good take on this. So thoughts on the Fed meeting tomorrow and how it could be a game changer. Okay, so there has been a major change within the Fed in the last few weeks. The Fed's focus has shifted from reducing unemployment, substantial further progress still a ways off, to reducing inflation. Inflation is no longer transitory. We saw this come out several weeks ago. Talked about this on the live streams here. Basically, this shift translates into a Fed more likely to raise interest rates sooner and faster. Okay. So financial markets have been pricing in this hawkishness, with many risk assets correcting lower and the yield curve flattening. Okay, what does this mean that the curve is flattening? So he talks about it here. But basically, the big question is now now what will the Fed communicate tomorrow? So that's today, the meeting we're talking about, in its last meeting of 2021. Okay. Will the hawkishness be enough to crash the markets or not? So 3 things to watch out for. So this is what you need to watch out for, basically. The Fed announcing accelerated tapering. So Fed signaling faster hikes via the dots. So nuances in statements, language, and Powell's words during the presser. How worried is the Fed about inflation? So here's his particular views on this. Again, I'm not a macro expert, so I just wanted to pull up this perspective because I thought it was good. So accelerated tapering delivered, yet mostly priced in. All right. Median dots, stuff about, talking about that. Now here's a twist. De-risking in anticipation has been extensive. We've seen that. I think that's what we're talking about here. Some of the, basically trying to get out of some risky assets like crypto ahead of something like this. Many already panic sold, so a lot of the selling is taking place. Positioning is light. Therefore, if the Fed were to deliver an accelerated taper signal, 2 hikes for 2022, nothing else, I would expect a rally across asset classes. Okay, so that could include crypto, could include stocks, could include lots of things. Particularly so in crypto, given the extent of the December crash, minus 20%, minus 50%, the doomsday panic positioning in futures options markets and forced year-end selling mostly concluded. Okay. So it talks about some traditional finance, a lot of types of stuff, but lots can still go wrong. I won't do the entire thread. I'll put a link down in the description below, but here's a TLDR. Expect a Fed not as hawkish as expected. Expect markets to rally in response. And if those things are wrong and the market tanks, expect continuation, some more bearishness from here. So I'll put a link down in the live chat replay. What do you all think down in the comment section below? It's like a runaway truck ramp. So, like I said, I don't know exactly what's going to happen in the short term. I, of course, don't know what's going to be announced today. I don't directly know how it's going to impact the crypto markets in the short term. But, big picture, I know people get a little nervous and start seeing numbers like this, $3,675 Ethereum when we were up to $4,800, something like that. Yeah, almost $4,900, close to $5,000, about a month ago. So, big picture, nothing has really, really changed in my opinion. In terms of adoption, in terms of where we're going with this tech, in terms of, continued fundamentals being bullish. We've seen these types of corrections happen, right? We went from $3,900 down to $2,700 in September. Okay, I remember when this happened. Okay, so we're coming from 4,800 down to 3,600. It's a very similar magnitude move. It could be even more bearish than that in the short term, but that doesn't change the fact that the upstream is still intact. Okay. Somebody says, am I again buying dip? So I did a buy when we dipped hard at about $3,700 a couple weeks ago. So I have not personally done any more buys at these price levels, but we're basically at the same price level that I bought in at 2 weeks ago, right when we crashed initially. So I don't have immediate plans to buy more right now at these current price levels. But if we dipped significantly further than this, there's a good chance that I would. Okay, so let's look at a couple of the things that came out since yesterday that people are talking about that could have some impact on what's going on with crypto right now. And if not, something definitely keep on your radar and be aware of. So this is definitely what happened yesterday at the Senate Banking Committee yesterday. So this is a clip that's been circulating around quite a bit. So this is from Senator Elizabeth Warren talking about the stablecoin risks to consumers and the economy. Okay, we've seen a lot of people, up in arms about this, fighting about this. Even some tweets from, some pretty prominent people about this. So let's see if we can just watch the video.
So unlike other cryptocurrencies like Bitcoin, stablecoins like Tether and USDC are supposedly pegged to the dollar. And the reason for this is to reassure people that stablecoins are as stable as using the dollars you have in your wallet or in your checking account. A stablecoin dollar, in other words, will supposedly be worth a real dollar. Now, that would make it a lot easier and a lot safer to trade among different tokens, to put up collateral for a risky bet, or even to pay for a cup of coffee at your local bodega. But I want to examine whether or not the stablecoin talk matches the stablecoin reality. Ms. Goldstein, let's say that I own $10 worth of Tether or USDC. If I want to trade my $10 worth of these tokens, am I guaranteed to get $10 back?
No, Senator. You're sort of dependent on the exchange where you're trading it. Because as a U.S. retail customer, I cannot go to Circle and say, please redeem my USDC. And Tether explicitly says no U.S. customer can redeem Tether. So I have to trade it on an exchange. Sometimes it fluctuates. Sometimes it's a little above the dollar. Sometimes it's a little below. But if there were a run, the peg could collapse. And we also don't really know necessarily what's backing all of these stablecoins, right? Tether is...
Hold on a sec. I want to get into that. Okay? I promise. Because I want to just underscore this point. That if Tether's tokens were actually backed 1-to-1, it would be one of the 50 largest banks in the country. But we know that it is not. And that's because, according to Tether's own report, only about 10% of the assets backing its stablecoin are real dollars in the bank.
Okay, so I won't just belabor the entire live chat replay down in the description below. Okay. So you can check that out if you want to watch the entire thing. But yeah, so we see lots of people kind of up in arms about these, about these clips. Okay, so this is nothing new. You know what I mean? But one thing that I think is really important. So first of all, we could see some just FUD in the marketplace around this particular coverage of crypto from the committee. Okay, so that could have an impact of what's going on here right now. I don't necessarily know that's a huge impact. Again, markets have lots of different factors in why prices do what they do. Okay, but one thing I want to underscore, all right, with this thing here is that stable coins are firmly in the crosshairs of regulators. Okay, so I want to talk about the silver lining with this, which could kind of be a good thing. Okay, in the grand scheme of things, because this is going into the conversation of crypto regulations and DeFi regulations. Okay, now there's more comments about DeFi, all that type of stuff. But when talking about regulating cryptocurrencies themselves, the actual crypto assets, there's some FUD around this fear, uncertainty, and doubt about what's going to get regulated, right? Because people are worried. Like, a lot of people sit on the sidelines, or people in crypto are worried about this because they're like, hey, if I don't want to buy these things because I fear that regulation could come in the future that could say, a certain group of people can't own this anymore, or new people can't buy it, and that would, either compromise my ability to sell my assets because I can't get them out, or maybe now because there's a limited number of buyers because of restricted access, that makes the value go down and that, tank the value of your assets. So, long term, we need regulatory clarity on what's going to receive these types of regulations, okay? Or just regulation in general. And if you've been watching this channel, stated over and over again that I think crypto can exist just fine without regulations, but I'm a realist to know that regulations are coming for crypto. So what's the best trade-off we can get is basically the least amount of regulation possible and the most favorable types of regulations. So I also covered pretty extensively on the channel about, some hints about what is likely to get regulated in crypto based on statements made by different regulatory bodies, particularly in the EU, which is, they list out all different types of crypto assets from stable coins to like layer one blockchain tokens that you can do staking with, utility tokens that actually have utilities and ecosystems like voting with the DAO, all that type of stuff, and stable coins and some others. And a really common theme that I'm seeing across these reports is that basically stable coins are firmly in the crosshairs of regulators, okay? And like I was saying, there's a couple reasons for this, I think, but I think it can be kind of a net positive for crypto because if we see things like, NFTs with no regulations, which I think makes tons of sense because, it's like saying, buying a Pokemon card is like buying a security. It's like, it's not really, it's just not really the spirit of the thing that you're buying. It's kind of a similar type of thing with NFTs in many cases. So all the way to stable coins, people want to regulate that because of the fear of basically a bank run, a lot like what, preceded, or not necessarily preceded, but that coincided with the beginning of the Great Depression, the massive stock market crash, in the 1900s, right? So basically, what I'm trying to make here is people fear that something bad can happen with stablecoins, and therefore that is one of the most likely places to get regulations. Okay, so that can be good because that means if we can keep stablecoins in the crosshairs and some of these other things not so much, then that's a positive. Now, there's another motivation for regulating stablecoins, in my opinion, which is basically to pushing people towards using central bank digital currencies. Okay, so basically, how do you, if there's a goal to create a central bank digital currency across many central banks across the world, how do you get people to do that? Well, you heavily regulate the alternatives, okay, and you make your thing look better because there's less friction to using it. There's conveniences. There's no penalty. There's lots of ways you could sort of skin that cat, but I think that's another reason that we also see stablecoins firmly in the crosshairs of regulators. So let me know what y'all think in the comment section below. Some funny comments in the chat. Somebody says, what about DAI? So that's a good question. Somebody's asking about DAI because DAI is a decentralized stablecoin. Yeah, I don't know for sure. I don't know how they would classify those differently than centralized stablecoins with clear issuers like Tether and Circle for USDC. So also another funny thing that came out yesterday was this. So I saw this yesterday. As I popped on Twitter, I saw people making a stir about this, and I actually checked on it and it was true, which was we had a huge bug inside of Coinmarketcap that made crypto assets absolutely explode in price. So I took a screenshot of this. I actually saw this on my computer. It sent the market cap to zero, which is probably just a calculation error. But it made the Bitcoin price go to like $778 billion. Ether price was $9 billion. This is awesome. Market cap went to like quadrillions. So I didn't do a post-mortem to figure out exactly what happened here. Obviously some sort of bug that got fixed because it's not doing it anymore. But this was pretty funny. So some good comments on the tweet thread there. And but one thing that did concern me about this is this is actually a vulnerability for some applications. So, there's sometimes people use Coinmarketcap oracles or Coinmarketcap in price feeds for oracles. So basically, if you're doing DeFi and your DeFi application uses smart contracts and that smart contract needs to know external data, you use oracles to provide that information. Because basically, smart contracts in a blockchain don't have access to outside data. The only thing they know about is basically like how much cryptocurrency are in the wallets on the blockchain, what information is saved inside of other smart contracts, other information about the blockchain itself at the current block, information about all that type of stuff, right? So you use oracles to get outside data to put on the blockchain. So basically, people use that for cryptocurrency prices all the time, and we see many oracles use data feeds from places like CoinMarketCap. So my question is, did any of these Oracle-backed DeFi projects blow up during this? I didn't take any time to research and see if everybody was okay, but if you know about anything that went wrong, let me know down in the comment section below. So, let's see here. Somebody says they want to learn crypto flash loan. So stay tuned. We have more information coming out about that pretty soon. So really quickly, I'm going to answer some more questions in the chat, but I'm going to do a quick personal advertisement here. So we are hiring for 2022. So we do plan to do a lot more at Dapp University, grow the team. And our main needs are content creators. So more blockchain developer content creators who can actually like code and appear on camera and do things on screen. Okay. So, and then also like a research analyst content creator. So if you can code and you're good on camera and can explain things and have a passion for helping other people, the same thing for a research analyst. If you understand how to analyze news as it's relevant to crypto, understand how to use DeFi, like you know how to use MetaMask, you understand how to use blockchain applications, and you can create content, you're good on camera, all that type of stuff, then those are our primary needs. In addition to a graphic designer who can do YouTube thumbnails and a lot more, and also like a project manager to manage a lot of the complex, everything we got going on here. We got a lot of stuff going on, especially behind the scenes. So I'll put a link in the live chat replay. Someone says, please, how do I get started with NFTs? So it depends on what you mean by that. If you want to learn how to create an NFT project, definitely go to my YouTube homepage. There's a tutorial on the free blockchain development courses on how to create an NFT project. Somebody says, are all oracles centralized and off-chain? So basically how oracles work. So it depends on what you mean by that question. So let's talk about how Oracle works in the first place. So basically, like I was saying, an oracle is something that just feeds information to a smart contract. So I could technically just be an oracle, right? I could just code up a web service that you plug your smart contracts into and you ask me for information and I give that information back to you. I technically can be an oracle because the whole idea is that all the smart contracts on the blockchain, or all the instances of the smart contract that you create in the blockchain are receiving information from the same place. That's why I use an oracle in the first place, because you have all these nodes that are spread across, the world that have to achieve consensus. In order to do that, they have to get outside data from the same place and ensure that it's the exact same. So I could just create a smart contract that, pulls, has like a web service that just provides you information. And you just have to trust me. I have to put in whatever information is there. And there's a trust assumption involved. So that's the whole idea is if you ask me for, what's the weather in London, like you just have to trust that I'm telling you the right information. Or, what's the price of Ether? Well, you just have to trust that I'm telling you the right information. So how you can help this problem is create a decentralized Oracle network where you have multiple, essentially, computers that pull in this information and provide it to the blockchain, okay? And then they have some sort of mechanism that helps determine what the right information is because multiple sources are feeding this information. Okay. So that's the difference between a centralized oracle would be like if you were just asking me for information, and a more decentralized oracle would be like what I'm talking about, where you have a network of validators like Chainlink, for example. So this is big dumping coming. I really don't think we're going to see a massive dump from here. I mean, I could be wrong. I think part of the reason I don't think we will is because lots of people are expecting it. Somebody says in May after prices, went down, they shot up fast. I mean, like I said, I'm not a big technical analyst. I don't try to call like short-term stuff and say this is where the price is going to turn around and win. But one data point that I'm seeing for a lot of people, especially in the Bitcoin price, is like the $4,200 like support level, it being similar to what we held in September. So we're still above that. If you look on the long time frame, especially if you were to draw this with candles, all right? Let me see if I can do. I don't know how to change the candlestick width on CoinGecko. I could pull up TradingView, but you can still pretty clearly see an uptrend in the pattern. And I don't think it's just about patterns. I think the pattern's indicating the nature of reality underneath, which is the fundamentals, which is the adoption. So can you tell me the roadmap for blockchain? Yeah, definitely go to my YouTube homepage, see the pinned video. It's how to become a blockchain developer in 2021. That video is highly relevant still, even though we're at the end of 2021. But stay tuned because I do plan on updating that video for 2022 in the coming weeks. All right, everybody, that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps these videos out so the more people can learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? Well, you can go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you how to become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching.